Right. Welcome back, everybody. Here on the channel, we are happy to have as a guest today, investor, entrepreneur, a man who built and sold two technology companies, ran multiple product growth teams at both Facebook and Snapchat, host of the wildly successful Pomp podcast, co-founder and partner at Morgan Creek Digital. You've seen him on CNBC, you've seen him on CNN. Now he's here at Altcoin Daily, the great, the powerful Anthony Pompliano. Thanks for being here, man.
Yeah, thanks for having me, guys.
Dude, super excited.
So you were just telling us that New York's starting to open up again?
Their restaurants have some stuff going on in terms of outdoor seating and more people on the street. So we'll see what happens.
Do we wear the mask? Do we not wear the mask? So much conflicting information.
For me,
in New York, there's only mask wearing. There's pretty much no buildings you're allowed to go into without the mask. They're heavy mask believers.
Right.
So for the audience, here's the game plan, team. We'll be talking about Bitcoin, the U.S. economy, general and cryptocurrency in general. We'll be on for about 50 minutes. Hopefully, we see a question from you in the chat. Aaron will be looking at the chat.
I feel like this is the man to talk to. Pomp always brings, the truth, the perspective.
We'll see.
Do you ever feel like if you and Mark Yusko went on CNBC together, you'd break the internet?
I don't think they'd let us do that.
Yeah, too many people. But
let's get into it.
Let's get into it. First, general question about Bitcoin. What are your thoughts of the current state of Bitcoin in 2020 / what are you most excited about?
Yeah, I mean, I think that Bitcoin has basically done exactly what we want it to do, what we expect it to do. And there's a lot of people who are incredibly intelligent in the space. They do a lot of analysis on all of the intricate details. I tend to just zoom back out and say Bitcoin has two core functions or two core aspects to it. One is it's the most secure computing network in the world. That continues to be true and actually is accelerating, right? It's becoming more and more secure over time. And then the second is that supply and demand economics still remain valid. And so having the halving actually occur, like the actual execution of the code, was a big kind of milestone. I think, again, just another data point that shows that this is a scarce asset. It will continue to have a disinflationary monetary schedule. And if demand rises over time, even if at a very slow rate, the US dollar exchange value will continue to increase.
I think scarcity, that's, for me personally, I think that's the one thing that people don't really understand is really significant with Bitcoin, the scarcity. You know what I'm talking about?
Yeah, to me, it's a weird thing where the asset is scarce, but when I go on, I can buy it, right? When I go on an exchange, if I want to work for it and earn it, I can get access to it. And so people don't think of it in terms of quote unquote scarce. The second piece of it is you can buy, $1 of it, right? It's not something where you've got like a house, for example. There's only so many houses in Los Angeles, right? And they're expensive. And you can't buy a piece of one in most cases, right? And so with Bitcoin, there's some elements that kind of hide the scarcity or make it less obvious. And that's why, again, I just zoom out and say, okay, you have to remind yourself, like, what is this thing? Why is it important? What makes it valuable? And if those things don't change, as time goes on, my conviction actually deepens because you're just saying that, hey, this thing has been valid for a longer and longer time period. Therefore, it has a higher probability of continuing on that trend.
The Lindy effect.
The Lindy effect.
Correct.
And now that we are post-halving, second half of 2020, how do you think this next cycle is going to be different than previous cycles in the past 10 years?
I think that the people in the legacy media are going to have an absolute mental breakdown if half of what I think is going to happen happens. And ultimately, what's going to occur is Bitcoiners are going to be proven right. The concerns around quantitative easing and all of the monetary stimulus and kind of the fiat system. Again, I don't think it breaks, but I definitely think we continue to see kind of cracks in the wall, if you will. And there continues to be a lot of structural issues there, which force central bankers to just make short-term decisions, right? Short-term, yeah, it's a great decision. Long-term, it's a horrible decision. And on top of that, I think you're going to see Bitcoin continue to gain dominance in the world. And as that happens, the US dollar exchange value will go up. And, if we're looking at an asset that goes up past just the all-time high, right? I mean, really, I think that point alone, you're going to see kind of the mini mental breakdowns on television and in print. But if this thing goes to 100,000, 200,000, well, all these numbers that are getting thrown out there, I literally think that you may see somebody rage quit on television. Like they'll literally just throw their hands up and be like, "What the hell is this thing?"
Look, Melissa Lee, or better name, Melissa Lee on CNBC.
No, I look. Actually, most of the people on CNBC, to their credit, either one, they understand it and are believers that this thing has value. Two, they understand it and have what I would consider intelligent ideas and opinions around why they don't believe it will have value in the future, right? So kind of like I understand it, but I don't believe X, Y, or Z aspect is valid. There's very few of them that I would put in like the ignorant camp. Of course, there's a couple, but most of the people on CNBC that end up being ignorant are the guests, right? The actual hosts themselves are pretty well versed and understand it, but they bring some guests on, and you guys have seen it, right? They come on and they just say ridiculous things, and now like even the Wall Street banks, right? I mean, Goldman Sachs had the big presentation they did, and I saw somebody tweet that it looks like they went back to 2014 and got all of the bear arguments against Bitcoin and just like recycled them, right? 6 years later. And so, part of this is you got to understand the incentives for somebody on Wall Street compared to Silicon Valley or elsewhere in the world. And the second thing is like, who cares about anybody's opinion? Even mine. Like, who cares what I think, right? The market's going to determine what happens here. And the last 11 years to kind of prove that everyone who is bearish was an idiot, right?
I mean, if you bet against Bitcoin, historically, you've been wrong every time, given enough time.
Hey, I know somebody who cares about your opinion. Super chat. Crypto and Culture asks, for Pump, what's your favorite metric for valuing Bitcoin price? Example, on-chain metrics and such.
Yeah, I don't worry at all about short-term price movement. I couldn't tell you where the price is today. When I tweet what the price is, literally it's because people are like blowing up my mentions, telling me what it is. To me, I don't worry about the value today or even in the next 2 or 3 years. When I think about value, I think out in terms of a decade plus, right? And the reason why I do that is Bitcoin is a very binary investment to me, right? It either is going to become the global reserve currency or it's going to be, not even worth talking about in 10, 20 years. And if that happens, if it does kind of ascend to a global reserve currency status, it will, from a financial return perspective in US dollar terms, be the best investment of all time, right? In terms of the importance in the world, again, it'll be global reserve currency, right? I mean, kind of self-explanatory there. And so when it comes to these individual metrics, I don't personally look at anything. What I do think is a really interesting one is there's this framework that I have in my head when I talk to institutional investors around to determine the value of something like this. You need two inputs. You need supply and demand in an equation to determine the price, right? Well, in the, let's say, gold market, we generally know what the existing supply of gold looks like. We generally know what the incoming daily, weekly, or monthly supply looks like. We don't know exactly, but we're pretty close. And then we can plot out or kind of forecast demand. And that gets us to where we think the price is today and where we think it's going in the future. With Bitcoin, we actually have 100% certainty. We know what the circulating supply is. Even if it's lost or stolen or whatever, we know exactly how many Bitcoin exist in the world today. We know exactly how many are going to come online today. And so you can almost like be accurate with one half of that equation, right? Down to the exact Bitcoin. And so now all you have to do is you've got to be able to forecast the demand. And you can do, super bull case, super bear case, whatever, but you've actually made a simpler mathematical equation to try to determine what the fair value is today and what it should be in the future. And so I think that Bitcoiners in general, or people interested in the asset, have an advantage compared to traditional markets, right? They have two inputs that are variable that they have to figure out. We really only have one. And I think that's where you see things like, stock to flow ratios or the co-integration models, right? That Plan B has done a great job with. Like those things are proving to be hyper active or accurate. And the reason being one half of the equation is a known verifiable, input.
And obviously you're a Bitcoiner. We consider ourselves more Bitcoin fundamentalists.
Which is almost the same thing.
almost. Do you consider yourself a Bitcoin maximalist?
No, not at all. I think that from my perspective, I haven't talked about this too much, but to me, the breakthrough in all of this is triple entry accounting, right? Or what I call like automated finance. And so the idea is, if you go all the way back to kind of the time of the Medicis, right? Double entry accounting was probably one of the greatest inventions in human history. Literally, there's this guy who's considered the father of accounting. He was writing a book on mathematics. He realized that some of these Italian merchants were literally using kind of debits and credit system to keep track of their businesses. He wrote a kind of a section in this mathematics textbook about it. And Leonardo da Vinci at the time is painting the Sistine Chapel. And he figures out that there's this book that exists that has another section on math and art. So he gets the book, he starts reading it. He really latches onto this double entry accounting idea, has this guy come and tell him more about it. He ends up telling his friends. His friends are the Medicis, who run the Medici Bank. They then kind of popularized double entry accounting. And that literally was the foundation for all sorts of innovation, entrepreneurship, the Industrial Revolution, like all of that stuff came from that single debits and credit system. But it was very silent. So if you think about, I have, let's say, a debit and credit system or double entry accounting for our business, for myself, each one of you do individually, but our balance sheets don't talk to each other, right? Our P&Ls don't talk to each other. And so the corollary is, think of communication previously. It was really, really hard to communicate with people in the past. You had to write a letter, you had to go visit them in person, right? As the telephone got invented, then the internet, like those barriers came down. And the more that we could get people interacting and communicating with each other, like that human is a node in the human network, right? The more those nodes kind of communicated, then all of a sudden human productivity went through the roof, right? And things like the internet have powered all kinds of things that previously were unavailable. Well, I think that's the same thing that happens with triple entry accounting. Triple entry accounting is essentially the same thing. It's connecting balance sheets, right? Or these debits and credit systems, and it's turning them into a shared ledger where you, I, and 10 other people can all now transact with each other in a very connected way. That way was previously not available before Bitcoin. And so there's things like permissionless, right? And all of that. But ultimately, triple entry accounting is super important. So first time that gets actually put into practice is with Bitcoin. It explodes. It's 150, $200 billion asset in about a decade. Now, there's going to be other places where we can apply triple entry accounting, right? We've invested in a number of businesses. I think the big question is like, who builds the technology that manifests the application of triple entry accounting to their business? So, take Figure Technologies, which we wrote a big check to. They're trying to do it for all sorts of debt products, right? So home equity line of credit, student loan refinancing, that type of stuff. We've also invested in businesses that are building on top of, let's say, Ethereum, right? And they're realizing, hey, there might be some benefits there. And so for me, it's less about like maximalism around a single blockchain, right? Or a single piece of technology. It's maximalism around triple entry accounting will be the most disruptive innovation in our lifetime, hands down, period. It'll make the internet look like it doesn't even matter, right? When we look back 100, 200, 300 years from now. Now, what that also means, though, is I am a maximalist in the sense of there's only going to be one currency. We get one shot to separate money from the state, right? And that's going to be Bitcoin. If Bitcoin does not work, we will never separate state and money, right? And the reason why is it's all about trust. Money is not a technology problem. It's a trust problem. And so when you think about a country where the currency has failed, so take Venezuela as kind of the preeminent example recently. Everyone believed in the state currency. That state currency failed. When Venezuela shows up and says, hey guys, sorry about that. Like we have a second one. Like here's our new currency. Everyone's like, I don't trust you. Hell no, I'm not putting my wealth there, right? And they go seek other options, whether that's US dollars, gold, Bitcoin, whatever it is. Same thing I think happens here with the separation of state and money. We have one shot on a global stage to separate state and money. If it doesn't work, it doesn't matter what else comes along as a currency. People will say, oh, separation of state and money doesn't work, right? And so I think that that's a important nuance for people to understand is you can actually be a maximalist around currency, being Bitcoin's our one shot to separate state and money, and still believe that the application of triple entry accounting will be pervasive in pretty much every other aspect of the global economy.
I love it. I want to check the chat. Aaron, how many people do we have watching?
Oh man, We have almost 1,000, 950 people watching, 218 likes. Everybody take 2 seconds, hit the like button for Pomp.
I do want to point out Pomp's links are down below in the description. He has a podcast. He has a.
What's your favorite way to get Pomp content? You so many.
I love YouTube. That's this stream, but he's on Instagram. He has a weekly newsletter. And if everybody who hasn't, go over to Pomp's channel, subscribe to his YouTube page. He's breaking up clips like all the good YouTubers want to do.
He's doing it right.
Pomp, and just what is your primary audience, would you say, for your YouTube page?
Well, it used to be people who are interested in Bitcoin, and now it is people who are interested in business technology and Bitcoin pretty much. I've really tried to make a concentrated effort to start including a lot of other content other than just Bitcoin content. And the thought process being, if you just look at the two people that are there kind of at the top of the screen, so you've got PD Mangum, who's a 65-year-old scientist who's super into health and fitness. And he's kind of figuring out how to use diet and exercise to increase longevity. He's also a Bitcoiner. And so it's great to be able to get him to come on, talk all about health and fitness and diet and exercise, all this stuff. And then we get a slip in Bitcoin. And so it exposes a whole new audience to Bitcoin. Same thing with Dustin Wilson. He's a master sommelier. There's only 200 of them in the world. And he's a good friend of mine. But he's got this whole wine community, and they really, really love talking about wine and all the intricacies there. Well, Dustin happens to be interested in Bitcoin, right? And so we can have a kind of a conversation that is a piece around Bitcoin. The rest is about things that his community cares about. And so it's a way to kind of expose more people to the idea of Bitcoin.
Ooh, did he give you any wine recommendations?
He did. I can't pronounce them. He knows that him and I always joke when we go to dinner. I ask, "You got Bud Light?" And usually he likes to go to places that maybe don't hang their hat on having Bud Light. And I tell him, "Look, it's water for the common man. You got to well, I got to have Bud Light, or it doesn't make sense."
Nice. I like it. And speaking of, you're talking about you invest in companies at your firm. Generally speaking, what's sort of your fund strategy for investing in cryptocurrency and digital assets? And maybe how does that differ from your personal strategy?
Yeah, so at the fund level, we basically invest in two things. We invest directly into cryptocurrencies. So obviously Bitcoin, about 15 to 20% of our funds go into that. And then we also invest into the infrastructure of the industry. So everything from exchanges to wallets to mining, all kinds of different things that we'll look at there on the infrastructure side. And the thought process is, if you look at the entire kind of blockchain industry, the two things that have outperformed everything else are infrastructure and Bitcoin, right? And so kind of if you look out over a long period of time with a venture capital fund, kind of 8 to 10 years, investing in those two things should drive the highest returns. And obviously that's what we're in the business of doing for our limited partners.
But I know you have the Bitwise fund, which is pretty much the top 10 minus XRP and Stellar. Isn't there another fund with like Bitcoin, Ethereum, the 20%?
So basically, we just have a fund that that fund really, what we did is we structured it in a way. It's called the Digital Asset Index Fund, literally digitalassetindexfund.com. And what we tried to do was create a index fund that was passive, that looked exactly like the S&P 500. So the S&P 500 is a collection of stocks, actually not even 500 in there, but it's a collection of stocks that have market weight averaged, rebalanced on a periodic basis, and then they put some rules around float requirements. So like Tesla's not in the S&P 500 because it doesn't have enough float, right? Same thing here is we said, hey, let's take the top 10, let's market weight average them, we'll rebalance it on a monthly basis. And then we created some float requirements. So that's actually why XRP, Stellar, and I think maybe one or two others ended up getting excluded because they held too much of it and there wasn't enough float. And then the way that it's structured is we believe that if Bitcoin continues to gain market dominance, when we first launched the fund, I think Bitcoin was like 60% of it. Now it's over 80% last time I looked. I don't know what it is, in the last week or two. But what ends up happening is it's a way for, let's say, an institution to say, hey, I don't know. Like, yeah, sure, you guys are talking about this Bitcoin thing, but like, what about all these other things? right? We can say, hey, go ahead and buy a passive index of kind of the large market cap. But really what they're doing is they're getting, 80+% exposure to Bitcoin. Everything else is super small. You might get kind of 2-3% of other stuff, which is fine. It's a way to get people in. But our main focus isn't so much that passive index fund. Our main focus is really the venture capital funds. That's where a majority of the capital we manage is. And that's where we think a lot of the returns are going to come from.
You personally, obviously you are, almost all in on Bitcoin or whatever, obviously a huge Bitcoiner, but are you exposed to anything else just for the gains or?
I think that I have a little bit of some stable coins that BlockFi keeps giving me on a monthly basis, and I keep trying to remember to go convert it to Bitcoin. So I think that's pretty much the only other thing that I have, either GUSD or USDC, whatever the hell they're giving me. But I think that I'm 99.9% Bitcoin. I wouldn't even really count that as anything. So, call it 100% Bitcoin. And then really the thought process is it's a very single concentrated bet, right? I've got very deep conviction in it, and we'll see what happens.
And thus far, it's been a good choice compared to the S&P.
Look, if you, I know we're going to talk about the economy a little bit, but if you denominate the S&P in Bitcoin versus dollars, the S&P is down. Right. And so I tend to think about that quite a bit there's a lot of financial engineering going on in the fiat system. The Bitcoin system, again, relies on two things: most secure computing network in the world, and is supply and demand economics still valid? And as long as that's valid, I think that Bitcoin's going to be a pretty good place to store your wealth.
And let's transition a little bit to the economy, but first a super chat.
We're getting inundated with super chats, so say as little as you like so we can fly through these, but we just have three real quick. Oh man, don't you hate it when you touch the screen again and they disappear? Okay, this first super chat. Do you think that one day we will put an order, this is big picture, do you think that one day we will put an order in for Bitcoin on an exchange and have to wait hours or days in line because there just isn't enough Bitcoin?
No, that's not, markets don't work that way, right? Because there's always somebody who's willing to sell. It's just about what price. So that person who goes in and says, hey, today if somebody goes in and says, hey, I want to buy Bitcoin, and there's no Bitcoin that anyone wants to sell at, let's say, whatever, 9,000, 9,500, 10,000, whatever the price is. If all of a sudden somebody then comes in and says, well, I'll buy your Bitcoin for 20,000, somebody will sell, right? So it's less about access and it's much more about price. And, do I think that can feed into a price appreciation? For sure. I keep telling people we haven't even gotten to the big show yet. Wait till central banks start buying this stuff and putting it in their reserves. Right. So I don't think we'll see that day. I think you'll just see price move a lot.
Right.
I like it.
And then just actually one more from Crypto and Culture. He says, thank you for the 3-entry accounting reference. Is there a book that I can share with my CPA buddies that really breaks down 3-entry accounting model?
There's not. I've tried to get a couple of people to write one. No one will do it, but there's not one, unfortunately. If you just Google around triple entry accounting, there's some good kind of articles and blogs that Google will point you to, but unfortunately, no book.
And then just finally, Ike says, happy belated birthday, Pump.
I appreciate that.
It was yesterday, right?
It was.
Dude,
I can't hide anything these days. I'm not a big birthday guy, but probably doesn't help that Polina's out tweeting it, but all good.
Dude, how'd you celebrate?
I did the same thing I do every day.
Work.
Yeah. Well, look, this isn't work. This is fun, right? Like the fact that I get to do this stuff every day is a complete joke, frankly.
Hey, by the way, tell Polina the Altcoin Daily Army said hi. I saw her in the background. We love lunch money.
She's in the other room now, but yeah, I'll definitely tell her.
That's cool.
All right, U.S. economy, sort of big picture, but we'll start with a specific question. In this last week, we saw stock from recently bankrupt companies like Hertz trade higher than before it was bankrupt. It feels very much like we're entering into a bubble, or we are in a bubble. What's your take on that?
Well, it's two things, right? So the stat I think I saw, don't hold me to this. I think it's in the last 10 days, they're on a net basis over that 10-day period, no single stock is down. So every single stock is up over the last 10 days. You literally could have just closed your eyes and picked any stock ticker and you'd be up. There's a reason for it. Structurally, the Federal Reserve is pumping asset prices to the moon, right? And they're doing it in a very systematic way. Until they stop doing that, you're going to continue to see that happen. They're going to have to devalue the dollar at some point. And I think that's going to be a pretty material event when they do and are successful there. But when it comes to something like Hertz, I think it was up 800% in like a week or 10 days or whatever it was. One day it was literally up over 100% after they had filed for bankruptcy. And look, people made money. Like, that's the crazy part, right? Is like, there's people who made money that day. But I do think that obviously we know that that's a pretty stupid world. Things have gone insane. I don't expect that to last forever, but things can last insane, for quite a while. And then the really crazy one is that they're going to sell more stock into the market. Like, the fact that they're being allowed to do that is absurd. But at the same time, like, I'm a free market, proponent. And so if people are dumb enough to buy it, it's kind of like, look, then you're the idiot, right? And don't be an idiot. So I don't know. That one's a little more nuanced to me, but it's pretty crazy to see all this happening.
And we've seen the Fed print trillions of dollars, and it worked. Like large companies in the stock market, unemployment has never been greater, but everything is reaching or almost reaching all-time highs for traditional markets. What do you foresee as sort of like the next step, or like another bullet they can fire if this inevitably doesn't work?
So I always say that they're out of bullets in terms of things that they can do from a option standpoint. What they can do is they can go bigger with the options they've already expended. So really the Federal Reserve only has two tools at their disposal. Every central bank has two tools. They can move interest rates or they can print money, right? And, news flash, I literally wrote about it as early as I think last June. They're going to go down way far on the interest rates and they're going to print a bunch of money. I had no clue they were going to go to zero. And I definitely didn't think they were going to do it in 2 emergency rate cuts. They could go negative. That would be the bigger move in interest rates. There's a religious element to that, right? People get super nervous about going negative interest rates and there's a bunch of controversy, but they could do it. On the quantitative easing side, like, they're not even warmed up yet, right? I mean, literally, I saw today the current administration is putting together a proposal for a $1 trillion infrastructure package. In May, the House of Representatives passed a $3 trillion stimulus package that ended up getting struck down by the Senate. And so you just look at this and you're like, look, the Fed balance sheet has expanded 75% this year, right? It's up $3 trillion. And if they get this $1 trillion infrastructure bill passed that they're supposedly going to propose here, that would be 100% growth, literally a doubling of the Fed balance sheet in a couple of months. Like, this is insanity. And I wrote about it this morning. I said, look, at the end of the day, it's like playing with fire, right? When you're a kid. Should you play with fire? No. Can you play with fire and not get burnt? Sure. But if you play with fire long enough, you eventually get burnt. Same thing with the Federal Reserve, right? Can they print money? Of course. Can they print money and solve the short-term problems and not cause long-term damage? Maybe. Should they not pay attention to history and print forever as much as they want? It's insanity. And so I think that's where we're at, is like they saw in 2008, 2009, like, oh, we never saw the high level of inflation in kind of the traditional metrics. And therefore, like, let's just do that same playbook again. But if you actually look at the problems we have today, it's really just a repeat of a lot of the problems we had in 2008, 2009, and they're just bigger this time. So now we got to print trillions of dollars rather than hundreds of billions. And so I think what you're going to end up seeing is they're going to keep trying to kick the can down the road, keep devaluing the currency. You're going to keep stealing the wealth of the bottom 50% of citizens. Wealth inequality gap's going to continue to separate. If they can't get together, a better plan on all this police reform stuff and everything, you're now going to have people who are marching in the streets, not only for civil rights. Civil rights is a huge, important cause. And that's kind of the impetus for a lot of this. But you better believe that there's a lot of people marching in the streets, because we have 40 plus million people who lost their jobs. And somebody said to me, they're like, look, most protests happen on the weekends. And then Monday comes and everyone's got to go to work. And the protests kind of fizzle out. 40 million people who didn't have to go to work. Right. So like, and by the way, they happen to be in the lower socioeconomic classes, right? They happen to be minorities that are hit the hardest by things like this. And so you're just kind of like creating this almost perfect storm where monetary policy is going to be a short-term Band-Aid, but it's going to create incredible long-term, negative effects. And it's an experiment. Like, there is no playbook for this. Let's see what happens.
True. And obviously it's working right now. Eventually, do you foresee, because of what you just said and more, are we heading into a recession? Best guess, nobody knows for sure. And what's your sort of big picture take on if traditional markets trend down for the rest of the year,
or even a depression?
What's your take on sort of Bitcoin?
Yeah, I think Bitcoin, people have forgotten that Bitcoin was a non-correlated asset for 10 years, 11 years, right? And everyone is yelling and screaming that Bitcoin's non-correlated for right now. Yes, over a 10-week period, it's non-correlated. But if you go back to the 2008 financial crisis, gold went down 30% in the summer of 2008, right? So a safe haven asset dropped 30% over multiple months. Why is that important? Because during a liquidity crisis, people sell all of their risk assets, right? They sell the things that previously were thought to be non-correlated, whatever. Well, if you then expand out across the entire crisis in 2008, so from, like I say, 2007 to 2011, gold was up like 3x almost. It hit a new all-time high and ended up coming out was one of the best performers out of that entire crisis. Well, look at Bitcoin. Bitcoin's following a very similar trend. It was down 50% in a single day. It was down in very big numbers over kind of the real bad part of the liquidity crisis. And it's moving with stocks. But ultimately, Bitcoin in most people's mind is denominated in dollars. So is the stock market. And so if you're going to pump asset prices, everything's going to go up. What ends up happening, though, is the difference is the fundamentals of Bitcoin are getting stronger. So you get price going up and to the right, fundamentals are going up and to the right. The economy, though, is doing something different. Stock prices are going up and to the right, but the economic data is actually going down and to the right. And so you're getting a separation between stock prices and the reality or the fundamentals. With Bitcoin, you're actually getting them moving in tandem. So it can appear to be correlated for, could be months. But ultimately, I think, 5 years from now, we'll look back and say, hey, there was a 3 or 6 month period where Bitcoin and other assets were correlated. But at some point, there is a separation, and you'll see kind of Bitcoin continue to follow the movement of the fundamentals, whereas you'll see either fundamentals drastically improve in this economy, or you're going to see stock market prices have to drop to kind of meet reality at some point.
As Paul Tudor Jones said, Bitcoin's the fastest horse in the race.
I think that he's right.
Let's transition to Ethereum for a little bit, just big picture type questions. Does Ethereum have fundamental value? And
are you bullish on the price of Ethereum, or how do you look at it?
I personally tell people I do not see or understand why Ether's price will go up in the future. Right? And Ether, not Ethereum, the platform that you build on. If you look at the way that Ether's monetary policy is structured, it is identical to a fiat currency. There's a group of people who make a decision on a periodic basis as to whether increase or decrease the supply. To their credit, they've made a decision to decrease the incoming supply every single time so far, but the opportunity exists for them to go the other way. And in that point, they would actually be engaging in a form of quantitative easing. Right? Whereas Bitcoin programmatically is designed to continue to quantitatively harden. And so I tend to think that although Ether itself's monetary policy has continued to do the thing that you would hope it would do, kind of a sound money-like principle, that's not actually how it's structured. It does not have to do that. And this goes to the number one point when it comes to kind of value on a currency basis. It's not going to be a competition on the technology side. Every currency is going to be digital, whether it's Bitcoin, whether it's kind of this ETH is money stuff, or it's a private corporation, or like a Facebook public corporation, or it's a nation state. They're all going to digitize their currencies. Where the competition is going to occur is solely at the monetary policy level. And I think Bitcoin is the only currency in the world that has a quantitative hardening mechanism that is hard-coded into the product and will not be changed.
Absolutely.
So any coin that's going after fast, cheap payments, it's pointless. You have to be a store of value first?
So yes, in a sense. And what I'll do is let's start not with the cryptocurrencies. Let's just start with money as we know it today, right? Look at what the US dollar is. It originally was gold. And gold's really hard to transact. It's heavy. It's hard to, move around. You got to literally cut it up, right? Do all these kind of things to use it as money. And that was money for literally hundreds, if not thousands of years. At some point, we decided, hey, this sucks. Like, let's create a better technology. And we created paper claims on the gold. So now the gold will sit in a bank or in a vault or at my house or whatever. And I'll just trade you this piece of paper that represents some amount of gold. You accept it because you know the gold is somewhere and you have a claim on it, right? And we did that for a long time. And then eventually we built on top of that things like a credit system, electronic money, all that kind of stuff. And so you kind of get this like stacked layer. But the foundation of that was gold. Now, we made a mistake in 1971 of coming off that gold standard and basically kind of took the foundation out from the house. And, we're still pretending like the house is never going to fall over. We'll see, right? That it's never been a good thing in history, but we'll see if we can defy history with that. Bitcoin is very similar in that Bitcoin is all about security, right? I always draw this spectrum for the institutional investors. And I say, look, you can have one or the other. You can either have super fast, sexy, innovative, all that kind of stuff on one end of the spectrum, or you can have rock solid, best in class security. You get one or the other. You cannot have both. And what Bitcoin has chosen, which I think is the right trade-off, is it has chosen for the rock hard security first. Now, if you want to get all of the other super sexy, fast, scalable things, you do not build it into the core protocol or the layer 1 protocol. You build that into layers on top of it, layer 2, layer 3, layer 4. So we see things like Liquid. We see it with Lightning Network, whatever, right? I tend to be bullish on them. Doesn't mean that they're going to be successful. Somebody else may have to build something else that actually ends up working. But just like gold was layer 1, and then we got paper claims and credit and electronic money and all that built on top of it, gold as the actual base layer never changed. Right? We didn't go and say, hey, let's take gold and come up with some new super fashionable way to use it. It just was gold. Same thing here with Bitcoin is Bitcoin security is number 1. Everything will be built on top of it. And so what ends up happening is most of these other blockchains or cryptocurrencies, in my personal opinion, they're trying to kind of skip the hard work. Right? And what I mean by that is they're trying to build in enough security along with all the super sexy, shiny, innovative type stuff. I think what many people in the Bitcoin community believe is there is no such thing as enough security. It's either you're secure or you're not. And especially when you then look at it, and I did this exercise with somebody the other day. I said, look at the, 3, 4, 5,000 cryptocurrencies that are out there. If the United States wanted to attack them, how many would it be successful with? Let's say there's 5,000 coins. I literally think 4,999 of them. Yeah, right. Yeah. There's one that is completely distributed and is ultimately secure. And it's the strongest computing power or computing network in the world. There's no government in the world that has a stronger computing network than Bitcoin. And so when you look at it like that, that's the game theory here, right? Is how do you get to that money? This is a multi-decade type play, in my opinion. And so that's why I don't worry about the price. It's so binary, but also I have such deep conviction because I think that all we are doing is we're rebuilding history. We're just doing it now in this digital world in a new format.
I like it. And in our final 10 minutes, I have one more question on Ethereum.
By the way, we got 1,440 people watching, 500 likes. Guys, let's get the likes up to 600. Final 10 minutes. We do have a hard out.
If you want Pomp back on the channel, guys, this is what it takes. This is what it takes. But
if it gets to 1,000 likes, I'll come back.
Oh my God.
Boom. Boom.
That's too hard. No, we'll definitely get to it in the next 24 hours, but by the time you leave, I don't know.
And Aaron and I totally agree about Bitcoin as a sound money versus Ethereum. But at the same, we talk about it on the channel all the time. But in terms of DeFi and Ethereum really being like the prime hype around DeFi, what do you look for in terms of projects being built on Ethereum that you said your fund invests in?
Yeah, so let me separate that into DeFi first and then the Ethereum aspect of it. So DeFi in general, I look at DeFi and I kind of expand the definition a little bit more. And it fits into something I call automated finance. So if you look at automated finance, that's basically machines running transactions, interactions, all that kind of stuff. DeFi specifically is maybe not automated, but it's decentralized, right? And so you can still have humans participating. So the way that I think about it is 100% of DeFi will be automated, but 100% of automated finance, or I'm sorry, some portion of automated finance will not be decentralized, right? So the bigger opportunity is not DeFi, it's automated finance. And automated finance as a category will have some DeFi in there. I think that it has incredible value. And we've actually invested in a number of things that kind of fall in that bucket. But to me, it's less about the decentralized aspect, and it's much more about the automated finance element. And there's people in the Ethereum community that kind of disagree with me on that, whatever. But ultimately, that's what I think is kind of where the value is going to accrue is automated finance. It's just a much bigger addressable market. The second thing is Ethereum today, for most use cases that people are trying to build on, is probably the best thing to use, right? So we tend to think that a lot of the work that's happening on Ethereum, it ends up being R&D, right? So if you look at pretty much everything that's built on the DeFi side on Ethereum, in the grand scheme of the world, it doesn't matter. Like it's so small that it doesn't matter. And by the way, like Bitcoin as a currency doesn't matter in the grand scheme of the global financial system either, right? So it's not a knock against Ethereum. It's just the law of numbers. It's just the way to look at the size. And so what ends up has to happen here is one of two things are going to occur. Either people are going to continue to build much more usability, better user experiences, all of that kind of stuff into decentralized finance applications that are built on top of Ethereum, or that is going to happen using Bitcoin as the core function of money, right? And I wrote this post one time where I drew kind of two different diagrams. On one side, I said you have decentralized money. It's provably a store of value. It's provably a medium of exchange. It's got sound money principles. That's Bitcoin. All of the infrastructure historically around Bitcoin, though, has been centralized. Right? If you look at all the exchanges, if you look at all the custody providers, like all of that stuff has been very centralized. So you got a decentralized money with a centralized infrastructure around it. On the other side of kind of the court, if you will, in the competition, is you have decentralized infrastructure. This is all the DeFi stuff that we're talking about. But you have money that actually isn't money, right? ETH is money is not true. It's just a fiat currency. And again, people may use it to exchange value, but ultimately it will succumb to the same thing that every other fiat currency has, right? If you can print money, you will do it, right? And so mark my words, Ether will eventually print money at some point because that's what they're financially incentivized to do. So you get one of two things. Either you bring Bitcoin over and you have it kind of operate in the DeFi infrastructure that exists today. That's things like wrapped Bitcoin, TBTC, all that, those types of efforts. Or you bring the decentralized infrastructure over to Bitcoin, right? Now, there's some technical challenges with doing that, right? That's why Ethereum ultimately and Vitalik created Ethereum. But we do think that that's what's going to happen is that latter example, right? You're going to see decentralized infrastructure built around Bitcoin. We've made a couple of investments there. I don't think that that's going to happen in the next 1 to 3 years in terms of like a mainstream mass adopted product. I do think, though, over the next 20 years, that's where you're going to see a lot of the value accrue. We could be wrong on it, but if we're wrong, the way that we think about it is we're not wrong in the sense of Bitcoin isn't money. It's just that Bitcoin will then be wrapped or somehow brought over to the DeFi infrastructure, right? So we've actually made investments on both sides. And the way that we look at it is we're going to be wrong on one of the bets. The one that ends up being right is going to more than pay for the one that we're wrong on. Right? I have my own personal opinion, but we're not stupid, right? As a capital allocator, we're going to bet on both and see what happens. And net basis will end up making money. But I personally think that the infrastructure around Bitcoin will become decentralized over time.
I love it.
By the way, as soon as you said 1,000 likes and I'll come back, our likes shot up by almost 250. So people definitely want you to come back.
I have two final fun questions for Pomp.
All right.
Maybe Aaron in the chat has some questions, but generally speaking, Donald Trump or Joe Biden, who would be better for Bitcoin?
Doesn't matter. All politicians are the same. They promise the world, get very little done. The one thing that I think we've learned over the last, 12 years now, both Barack Obama and Donald Trump have been highly controversial candidates, right, for one half of the population or one political party. And really that's been perpetuated by just social media in general, right? I think every political candidate was quote unquote controversial. It's just that now this has all been done on the internet. But if you look at it, both of them have got a bunch of stuff done, right? In terms of they passed tons of legislation and all this kind of stuff, but really not that much has changed. Like the president doesn't really have that much power. Yes, they could say we could go to war, or they can, try to influence the Fed. They can introduce acts like, ACA on the healthcare side, whatever. But then the beauty of a democracy, checks and balances, the different political parties is like, literally look at ACA, like it gets approved and then all of a sudden the next administration comes in and they start to try to repeal it. Right. And so like you never really get kind of what you get, let's say in a economy or a government like China, where it's a very centrally planned, there's a person in charge for decades and they can really implement their idea of what should happen. In the United States, that just isn't the way it occurs. I don't think that Trump or Biden will end up actually being good for Bitcoin or bad for Bitcoin. It'll just kind of be indifferent. Maybe you could make the argument that like Trump could fire off a tweet here and there and it could hurt the price for a day or something, but I tend to think that it's not going to matter. That'd
be bullish.
And my final question is from a fan of Bitcoin, Bitcoin artist Brecky von Bitcoin. Pomp, what is the best article you've read lately? Anything is fair game.
I saw him tweet this. No, I think that the best thing that I've read recently, I'm going to cheat. I'm not even going to say something that I read. Plin and I recently watched the 2-part documentary on Garth Brooks on Netflix. And I mean, I grew up in North Carolina, so I've listened to country music, but I wouldn't say that I'm a fanatic. I listen to all other kinds of music as well. I knew who Garth Brooks was, didn't know that much about his story. But when you watch something like that, I think it's just pretty cool to see somebody who came from, pretty poor area and just put the work in over decades to become the greatest solo selling artist of all time. That's probably just through recency bias. Like that's one of the coolest things recently is just seeing kind of them tell that story through so many different perspectives. It's pretty cool to see.
Interesting.
Is he the one who does Friends in Low Places?
Yes.
Yeah. So he basically, a lot of people don't know this, but he when he first got to Nashville, everyone was like, dude, go home. Like you got no shot around here. And he just stuck it out. Right. And then when he started to actually crank on some of these songs, I think it was Last Dance, they say in the thing, he had like previously had that and just sat on it. And then like some record producer or somebody who's helping him make the album heard it and was like, dude, what are you doing? Like, you gotta publish this. And he's like, I don't know. Like, it's kind of weird. And he was like, you will regret this for the rest of your life if you don't, get this out there. And then once he released it, I think somebody in promotions at Capitol Records said to him, congrats on your #1 hit. And Garth was like, what do you mean? It's sitting at like, 50 on the Billboard list. And he's like, dude, I couldn't keep that song from going to #1 if I tried. And then within weeks it hit #1. Right. And so it's like cool little things like that where you just see kind of behind the scenes of how stuff gets built. I'm always interested in.
Nice. Final question, Aaron?
I was looking at the chat. Well, we're definitely going to get to we have 800 likes right now. Definitely going to get to 1,000 in the next couple hours after the people rewatch this. So you're going to have to come back, Pomp.
Sounds good to me.
Cool.
All right, everybody out there, thank you for tuning in.
Follow Pomp on YouTube. He's dropping quality content on a regular basis. Links are in the description.
And we'll see you tomorrow.